Ever feel like the finish line of homeownership is hiding a secret final boss? You've picked your dream home, you've got your loan, but then closing costs appear. Don't let them sneak up on you. Welcome back to our series on navigating the path to homeownership. I'm Duane Buziak, a senior mortgage loan officer. You've made it through understanding the crucial role of a broker, getting pre-approved, demystifying loan types, and even cracking the code of mortgage rates. Congratulations! You're almost at the finish line of your home ownership journey. But before you cross it and get those keys in your hand, there's one final, often misunderstood hurdle: closing costs and the closing process. For many home buyers, these can feel like a last-minute surprise, a hidden expense that suddenly appears just when they thought they had everything budgeted. It's a moment that can induce anxiety, but it absolutely doesn't have to. Today, my goal is to strip away the confusion and shine a bright light on what closing costs truly are, why they exist, who typically pays what, and exactly what happens during that final closing appointment. Understanding these elements beforehand is crucial for avoiding stress, managing your budget effectively, and ensuring a smooth, confident journey to becoming a homeowner. As a seasoned mortgage professional, I've had the privilege of guiding countless individuals and families through literally thousands of transactions. I've seen firsthand the relief that comes from clarity and preparation during this final critical stage. My commitment is to ensure you feel informed, prepared, and excited as you approach the closing table. Let's demystify this final step together. What are closing costs? Let's start with the basics. What exactly are closing costs? In simple terms, closing costs are the various fees and expenses that you, as the buyer, and often the seller, pay at the end of a real estate transaction. These are not part of your down payment or the principal loan amount itself, but rather a separate set of charges necessary to finalize the mortgage loan and officially transfer the property from the seller to the buyer. Why do they exist? Think of it this way. Buying a home involves a whole team of professionals and services behind the scenes. From the lender processing your loan, to the title company ensuring clear ownership, the appraiser valuing the property, and the government recording the transaction. Closing costs are essentially the aggregate of the fees paid to these various third parties for their essential services. They cover the administrative work, legal documentation, and necessary checks that ensure a secure and legitimate transfer of property and funds. The amount of closing costs can vary significantly, typically ranging anywhere from 2% to 5%, or even more in some areas, of the home's purchase price or loan amount. So, on a $300,000 home, you might be looking at $6,000 to $15,000 in closing costs, in addition to your down payment. This is why understanding them well in advance is so critical for budgeting. The good news is, transparency is built into the I&ISD process. You won't be blindsided at the last minute if you know what documents to look for. The two most important documents for understanding your closing costs are the loan estimate. Erstes, L. You receive this at least 3 business days before your closing appointment. It's designed to allow you to compare the final figures against your initial loan estimate, ensuring accuracy and preventing any last-minute surprises. This document is incredibly important, and we'll dive deeper into it shortly. It's also important to remember that who pays which closing costs can be a point of negotiation between the buyer and seller. While some fees are traditionally the buyer's responsibility, and others the seller's, in competitive markets or as part of negotiation strategies, either party might agree to pay for costs typically assigned to the other. This flexibility underscores the importance of a skilled real estate agent and mortgage professional working together on your behalf. Breakdown of common buyer closing costs. Let's break down the typical categories of closing costs you'll encounter as a buyer. These are the fees that contribute to that 2.5% plus of your loan amount. Lender fees, loan origination, road administrative fees. These are the fees charged by your mortgage lender for processing and preparing your loan. Origination fee. This is essentially the lender's charge for providing the loan. It covers the costs of evaluating, preparing, and funding your mortgage. It's often expressed as a percentage of the loan amount, e.g. 0.5% to 1.5%. Underwriting fee. This fee covers the cost of the lender's underwriting department, which assesses the risk of your loan application, verifies your financial information, and determines if you meet the loan's eligibility criteria. Processing fee. an administrative fee for the various tasks involved in processing your loan application, such as gathering documents and coordinating with third parties. Application fee. Some lenders charge a small upfront fee simply to process your loan application. This is sometimes non-refundable, but can occasionally be credited back at closing. Discount points. As we discussed in Day 4, these are optional fees paid directly to the lender at closing in exchange for a lower interest rate over the life of the loan. 1 point equals 1% of the loan amount. You pay this upfront to buy down your rate. Quote, third-party service fees. Required by lender, essential services. These fees are paid to outside companies for services required by the lender or necessary. For the transaction, appraisal fee. A licensed appraiser evaluates the property's value to ensure it's worth the loan amount. This protects both you and the lender. The fee typically ranges from $400, $700, but can be higher for larger or unique properties. Credit report fee. Covers the cost of pulling your credit reports from the major credit bureaus to assess your credit worthiness. This is usually a small fee, often around $20, $50. Flood determination fee. A service that determines if the property is located in a designated flood zone, which would require special flood insurance. This is a nominal fee. Tax service fee. Paid. To a third-party company that ensures your property taxes are paid on time and advises the lender of any tax delinquencies. Title insurance fees. These are crucial. Title insurance protects you and the lender against financial loss due to defects in the property's title, e.g., unpaid liens, forged documents, boundary disputes. Lender's title insurance. Lender's policy. This policy is mandatory and protects the lender's investment in the property for the life of the loan. Owner's title insurance. Owner's policy. While often optional for the buyer, but highly recommended. This policy protects your equity and ownership rights for as long as you or your heirs own the home. In some regions, the seller customarily pays for this, but it's often negotiable. Title search fee. Covers the cost of researching the property's history to ensure there are no outstanding liens, judgments, or other claims against the title that could affect your ownership. Escrow fees. Why? Closing fees. Paid to the escrow company, title company, or attorney, depending on your state's practices. For managing the closing process, this includes handling all funds, documents, and ensuring all conditions of the sale are met. Survey fee. In some cases, particularly if property lines are unclear or for certain loan types, a land survey may be required to verify property boundaries. And easements. Prepaid items and escrow impounds, often called prepaids. These aren't technically fees for services, but rather payments for future costs that you make at closing. They are usually held in an escrow account managed by your lender. Prepaid interest. This is the interest that accrues on your loan from the day you close until the end of that current month. Since your first full mortgage payment covers the previous month's interest, this initial amount ensures you're caught up. For example, if you close on the 15th of the month, you'll prepay 15 days of interest. Property taxes. Initial impound. Lenders often require you to pay several months' worth of property taxes up front into an escrow account. This cushion ensures there are sufficient funds to cover future tax bills when they become due. As the lender wants to protect their investment, the amount varies by location and timing of tax cycles. Homeowner's insurance. Initial impound. You'll typically need to pay your first year's homeowner's insurance premium in full at closing. Additionally, lenders usually require you to deposit an extra 2 or 3 months of premiums into your escrow account to start building a reserve for future payments. FHA Upfront Mortgage Insurance Premium, UFMIP. For FHA loans, a one-time UFMIP, currently 1.75% of the loan amount, is usually financed into the loan, but you might see it listed as a fee if you choose to pay it out of pocket. Conventional PMI. If your down payment is less than 20% on a conventional loan, you might need to prepay a portion of your private mortgage insurance, PMI, at closing, though often it's just collected monthly. SIC. Government recording and transfer fees. These are fees collected by local and state governments for the official recording of property transfer and mortgage documents. Recording fees, charged by the county or municipality to officially record the new deed, transferring ownership to you, and the mortgage or deed of trust, securing the lender's lien in public records. Transfer taxes, aka documentary stamps, conveyance. Tax. These are state or local taxes assessed on the transfer of real property. The amount varies widely by state and even by county, and who pays this is often negotiated or dictated by local custom. Optional fees. Buyer's choice. While not always mandatory, these are fees for services that are highly recommended for your protection. Home inspection fee. While usually paid out of pocket at the time of the inspection, it's a crucial step that helps you identify any potential issues with the home before closing. Attorney fees. In some states, known as attorney states, like Virginia, North Carolina, or New York, an attorney must be present at closing and review. Documents. In other states, an escrow or title company handles this. If you choose to have your own attorney review documents, their fees would be part of your closing costs. This extensive list demonstrates why closing costs can add up. But remember, the loan estimate and closing disclosure documents are designed to give you full transparency on every single one of these fees. Seller's closing costs. While our focus is on the buyer, it's helpful to understand that sellers also incur closing costs. Knowing this can help you in negotiations. Common seller costs include real estate commissions. This is often the largest expense for the seller, typically 5 to 6% of the sale price, paid to both the buyer's and seller's real estate agents. Owner's title insurance policy. In some regions, or by negotiation, the seller pays for the buyer's owner's title insurance. Prorated property taxes and HOA dues. Sellers will pay their share of property taxes and homeowners association dues up to the closing date. Transfer taxes. In some areas, these are customarily paid by the seller or split with the buyer. Mortgage payoff and recording fees. The seller must pay off their existing mortgage, and there's usually a small fee to record the release of their old lien. Seller concessions. Sometimes, as part of negotiations, sellers agree to pay a portion of the buyer's closing costs or provide credits for repairs. This is a common way to sweeten the deal for a buyer. The closing process. This is where all the pieces come together to finalize the transaction. Final loan approval. After your initial pre-approval and conditional approval, the lender will complete their final review. This often involves a last check of your employment, credit, and assets to ensure nothing has changed. Once everything is confirmed, your loan receives clear to close status, which is fantastic news. The closing disclosure, CD. This is perhaps the most critical document you'll receive leading up to closing. The lender is required to send you the closing disclosure at least 3 business days before your scheduled closing date. This mandatory 3-day review period is your opportunity to meticulously compare the final figures on the CD with your initial loan estimate. What to check on the CD? Loan terms. Verify the loan amount, interest rate, fixed or adjustable, and loan term, 15D stands, or 30 years. Estimated payments. Confirm your monthly principal and interest payment, and total estimated monthly payment, including taxes and insurance, if escrowed. Closing costs. Page 2. This is where you see the itemized list of all fees. Look for any significant increases from your loan estimate that haven't been explained. Small differences are normal, but large variances warrant immediate questions. Cash to close. This is the final amount of money you need to bring to the closing table. Ensure this matches your expectations and that you have the funds readily available. This 3-day rule is designed specifically to protect you from last-minute surprises. If any significant changes occur after the CD is issued, like a change in loan product or the APR increasing, the lender may be required to issue a new CD, triggering another 3-day waiting period. This is why it's so important to review it immediately and ask questions. Final walkthrough. Usually, a day or 2 before closing, you'll conduct a final walkthrough of the property with your real estate agent. This is your last chance to ensure the home is in the condition agreed upon in the purchase agreement, that any negotiated repairs have been completed, and that no new damage has occurred since your last visit. Don't skip this step. It's your final quality check, the closing appointment, aka the closing. This is the big day. The closing appointment typically takes place at the office of the title company, escrow company, or an attorney. Depending on your state, who attends? You, the buyer. The seller, often virtually or at a separate time. The closing agent will guide you through signing a stack of legal documents. You'll sign the promissory note, your promise to repay the loan, the mortgage or deed of trust, the legal document that pledges the property as collateral for the loan, and the final closing disclosure. You'll also review and sign various other documents related to property disclosures, initial escrow account statements, and more. You will also confirm the exact cash-to-close amount and arrange for its transfer, typically via wire transfer or certified check. Personal checks are usually not accepted for large sums. Seller's side. The seller also signs documents too. Transfer ownership, including the deed. After funding, the closing agent will send the new deed, transferring ownership to you, and the mortgage or deed of trust, securing the lender's lien to the county recorder's office. This officially records the transaction in public records. In some states, recording happens immediately. In others, it might take a day or two. Keys. Once the loan is funded and the deed is recorded, or sometimes immediately after signing depending on local practice, you'll receive the keys to your new home. Congratulations, you are officially a homeowner. Preparing for a smooth closing. To ensure your closing is as stress-free as possible, here are some key tips. Understand your loan estimate early. Pay close attention to your initial loan estimate. Compare it carefully to any previous estimates you received. Don't hesitate to ask your loan officer questions about any line item you don't understand. The more informed you are early on, the fewer surprises there will be. Review your closing disclosure CD meticulously. Take full advantage of that mandatory 3-day review period. Compare every single figure on the CD with your last loan estimate. If you spot any discrepancies, immediately contact your loan officer and closing agent for clarification. Do not wait until the last minute. Avoid major financial changes. From the moment you apply for a mortgage until closing, avoid making any significant financial moves. This means no new credit card applications, no large purchases, like a new car or furniture, no quitting your job, and no co-signing loans for others. Any major change can impact your credit, DTI, or employment verification, potentially delaying or even jeopardizing your loan approval. Organize funds for cash to close. Confirm the exact cash to close amount a few days before closing. Plan how you will transfer these funds. For large sums, you'll typically need a wire transfer or a certified check. Ensure you have the funds readily available in an accessible account. Ask questions. This is perhaps the most important piece of advice. Never be afraid to ask questions. Your loan officer, real estate agent, and the closing agent are there to help you. If you don't understand a document, a fee, or a process, ask for clarification. There are no silly questions when it comes to your biggest financial investment. Attend your final walkthrough. This is your last chance to confirm the property is as expected. Don't skip it. Even if you're busy, it can prevent major headaches. After closing. Conclusion. Closing costs and the closing process are integral parts of the home buying journey. While they might seem daunting at first glance, they don't have to be a source of anxiety. With proper preparation, clear communication with your mortgage professional and real estate agent, and a thorough understanding of the documents involved, you can navigate this final stage with confidence and ease. My team and I are dedicated to guiding you through every single step of your home ownership journey, from understanding your initial options to celebrating at the closing table. We prioritize clear communication, transparency, and proactive support to ensure you feel knowledgeable and empowered throughout the entire process. Ready to confidently approach your home closing? Don't leave this critical final step to chance. Contact me for personalized guidance. Visit my website at http://duanebuziakmortgagebroker.com or call my office directly at 804-2100-8663. Let's make your home ownership dreams a smooth and successful reality. Thank you for watching.